everyone, and welcome to Spark. I'm Swarnima. I'm a senior project manager in the equities trading team here at the London Stock Exchange. And today I'm very delighted to be speaking about DORA and cyber resilience with some experts in the field. I'm joined by Kobe Friedman, who's the CEO and co founder at Findings, Ian McCaw, who's a managing director and head of digital M&A at Aon, and Guillaume Conson, partner at Linklaters. A very warm welcome to you and many thanks for joining the panel today. Just to note that the session is being recorded and anyone who wants to revisit the content or share with any colleagues can do so by revisiting Spark, where this webinar will be live as a video. This is designed to be an interactive session, so we do encourage you to ask questions using the functionality on the screen in front of you. And you will also see that ask a question option. It's on the top right-hand corner of your screen. Those questions will feed directly to us, and I will ask the panel during the 10-minute Q&A section at the end of this webinar. So let me begin by asking the panelists to please introduce yourselves and give our audience a bit of an insight into your focus in this field. So how do you help companies prepare for cyber issues, and how do you help them think about cyber resilience? Guillaume, if you don't mind starting us off, please.
Sure, and thank you very much for the introduction. So I'm a partner at global law firm Linklaters, part of the TMT team as it's called here, so technology, media and telecoms. And as we all know, the last couple of years, of course, our dependence in technology has increased tremendously, as has the need to have that technology be resilient because of this dependence. So as a lawyer, we come to this, of course, from a legal risk perspective. And the type of assistance we provide to our clients, by the way, often also with input from technical experts, is very much throughout the process. So it's both in terms of preparation, in terms of reaction to incidents, and in terms of learning from these kind of happenings. And of course, we do that guided by the legislation, and we'll come back to DORA and etc. Not only the letter, the black letter of the law, but also in the spirit of the law, and we can also address that in combination, of course, with a lot of experience that we have built on the ground dealing with these kind of incidents and the best practices we've developed on that basis.
Ian, go ahead.
Hi, yes, Ian McCaw. I'm Managing Director here at Aon, focusing on digital in a transaction context. I've spent a number of years working with global financial institutions, with technology firms who would be, frankly, in the sphere of DORA, and also, working in transaction context, helping companies through IPOs. From a cyber and digital resilience perspective, clearly the focus of DORA is around upping the resiliency and capabilities of companies in the financial markets. Clearly, the financial markets are intrinsic to our everyday livelihoods. Everything from payment systems to for food shopping and everything through to operating the businesses that we all work in. And so DORA, is clearly, making a number of key changes that we'll reflect on in this session.
Thank you, Ian. And Kobe?
Hi, thank you. I'm Kobe Friedman. I'm the founder and CEO of Findings. We're a technology company, global one, that focuses on supply chain risk and supply chain resiliency automation. We provide our customers with tools and capabilities and methodologies that they can implement in order to gain visibility and scale across their supply chain. We serve the need of companies in various jurisdictions all around the world to basically scale dramatically their supply chain compliance visibility because of both regulatory requirements all around the world. DORA is one of them, as well as the fact that supply chain cybersecurity became one of the top attack vectors in the industry in recent years. And in this session, I will focus a bit about best practices and the attack vector itself and how to address it.
Great. As you can see, we've got quite the range of experiences here. So let's maybe just start from the basics. Ian, could you help us define DORA and what's changing? And maybe let's delve into what the key considerations are for UK companies.
Yeah, sure. I mean, look, as I said, DORA is a fascinating regulation, and that's very specifically focused on the financial services industry, the financial industry, but also their critical third-party suppliers. And I think that's really recognizing the importance of the financial industry to the operation of the day-to-day livelihoods, businesses, and so forth. The key things that are changing are there's kind of five things that are really DORA is very focused on. One is around the digital governance and cyber resilience. So looking at the overarching governance of businesses, looking at their how they're managing risk, how they're identifying critical assets, key business processes, etc. But also, DORA absolutely recognizes that incident response reporting is important. There are specific requirements around notification within 24 hours of an incident happening, and then a further update within 72 hours. So making incidents more transparent, more aware. There's a lot of incidents that happen today that you've been a cybersecurity practitioner, knowing that there's incidents happen that are not in the public domain. So not suggesting these will be public, but it'll be notified to the regulator. There's also the whole security testing. So actually proving your digital resiliency as a business, specific requirements around security testing. And that ties into the governance regime around risk management and understanding what's important to test. And then the last couple of things are, as I mentioned, third-party, critical third-party providers. So which providers are important to the operation of the key in scope companies that are deemed important to the financial markets. And so that means you might not be, you could just be a tech company, right? And actually supporting a bank or supporting an exchange. And therefore you could fall into the remit of DORA. And as I said, I've been in those types of companies, and that's a big change as well, right? Being able to step up to the kind of requirements that are here. And then lastly, it's information sharing. So it's sharing of information around the threat landscape, around specific incidents, etc., to frankly help improve, right? This is a common challenge across the industry. Whilst every business seeks competitive advantage, that information sharing in this topic is, kind of herd immunity really is the focus. So, those are the five key things. To a certain extent, they're all things that cybersecurity practitioners, lawyers, etc., would talk about as important. So these are, to a certain extent, common sense. But the difference is it's becoming a regulation, which means it's a mandatory requirement. And then, obviously it's an EU regulation. The last thing I would say is that this could very well still impact UK companies. Obviously, UK would not be typically, required to adhere to EU laws and regulation. But in the state of DORA, because of the financial markets, you might be an ICT provider providing a service to a bank, or indeed you may be performing a financial service in a manner that is actually puts you into EU jurisdiction. And of course, I'm not a lawyer. We have some of our colleagues on the phone who can talk to that side of things. So yes, it can very much apply to UK companies.
Yeah, thank you for that. And you're right. I mean, as the London Stock Exchange, we certainly do think about those 5 pillars, but it is a little bit different for some of our European companies to well, systemize and standardize that. And to that end, it's really valuable to think about the implementation of DORA and these similar standards. I think it might be really valuable to talk about it from a technical assessment perspective, as well as for third parties. And I wonder, Kobe, if you could weigh in on that. And then Guillaume, I'd love for you to complement that with the legal perspective as well. I think you might be on mute, Kobe.
Yes, sorry. I want to elaborate a bit about the technical aspects and how to address vendor risk management from a technical perspective. So I think it's important to understand that when we are talking about supply chain resiliency, about vendor risk programs, TPRM programs, it's nowadays far beyond the way it's been done in recent decades. So third-party risk assessments has been here forever in the last decades, but the landscape is changing by few trends. One is horizontal visibility. Basically, banks, financials, large companies, critical infrastructures, they need to gain much more visibility across their immediate vendor base, their partners, their third parties, from an average of about 10% of critical vendors to all the way to almost 100%, coming from the understanding that the attack vector is such that a very small vendor could be breached and through that provide access to the financial. So this is number one. The number two is about going downstream to the end tier. It's no longer sufficient enough to assess a vendor. You need to understand the entire chain below this vendor. And this is most important in software supply chain. If you're consuming software, if you're buying a project, a software development project and such. And the last one is that the needle is moving from periodic assessments and audits to continuous monitoring. So those three are very important when we are addressing DORA program. And for those trends, people need to develop a whole new approach of how to assess and continuously monitor vendors. You need to do an assessment which is specific and contextualized to the inherent risk of the specific engagement with the vendor. It's not a one-size-fits-them-all kind of technical assessment. You need to understand what your vendor engagement is, what is the kind of attack vector, what's the impact on that, to do an IRR analysis, and based on that to basically decide how to assess and monitor the vendor and to act upon it continuously. The second one is around continuous contextualization. It doesn't mean the same a large or small vendor and a significant or lower kind of threat. We need to prioritize. And when we're talking about customers, for example, like we have banks, they might have 10,000 vendors that needs to be assessed. Each vendor on average creates about 20 to 30 vendors on a continuous basis. That means a lot of gaps. Not every one of those gaps need to be mitigated in the same importance. So you need the methodology to prioritize. And last but not least, is about continuous monitoring. You need to have continuous visibility, mainly because you're becoming more and more accountable for the breaches of the vendor. Just to give one example, and then I'll finish. Cloud security monitoring. This is a more and more required thing in the industry, specifically in the banking sector. The vendor could have been passed the CSA assessment, the cloud maturity assessment, and 5 minutes afterwards, buckets are being exposed unencrypted in the cloud, and all your data is being exposed. You need to be on it, mainly because you are accountable for it. And last but not least is the vendor disclosure program that every company should embrace. It's no longer sufficient enough to just have it on your agreement as a clause. You need to have a methodology to enable to manage that at scale.
Thank you. Thank you, Kobe. So just to follow up with maybe the more legal perspective, but also echoing some of the things Kobe mentioned in terms of accountability and things no longer being sufficient. If you look at it from a legal perspective, I think there's really three things we want to point out on what an implementation looks like. And the first thing is that it's very much become an all-company effort. It's no longer a story of dividing the tasks and one team for example, the IT team does something, the risk team does something, the compliance team does something. It's really about having top-level management involvement, and it's about coordination of the approach. And that's something that is quite evident on the DORA, but even on a more general perspective, even if you would not be directly subject to it, it's more and more also the recommended approach for all these compliance programs. The second element that in practice, we often start with a so-called gap analysis. So looking at what is in place already and comparing it to the requirements of the law. Of course, in large financial institutions, you will have many of the sub-processes in existence. You may have things like a process to manage data breaches, to manage notifications, etc. But where it all comes together, and that's the third point, is that especially if you look at DORA, the framework is first of all very comprehensive. A bit like Kobe was saying, it's no longer sufficient to look in a small way at your third-party vendor risk. You really need to zoom out and look at the risk and how that ties into your own internal processes. And this requires really a horizontal approach, and that's why I'm insisting on the coordination piece. It's really something that needs to be tackled together. And to give one very concrete example is if you are experiencing a personal data breach, you already have under the GDPR a process to manage that. But if you look at the wider picture of cyber, you may have a breach that does not affect personal data, other types of data. You may have a breach that affects a system that does not contain data, but does something in your processes, and that will also need to be addressed. The second element there is that DORA is also very prescriptive, so it goes quite far. And if you look at the secondary legislation, it's even beyond that, very prescriptive on what you need to do. For example, it requires threat-led penetration testing. That's a specific thing you will need to do, a specific action you can take, but that is imposed by the law. And as I said, making sure all of that works really needs to be centralized. And last but not least, also worth mentioning that this is very risk-driven approach. So you will have to assess from a technical perspective also where the risk is in order to then address it in your processes and your procedures.
I think we'll return to some of those questions, and certainly, Kobe, especially the point that you made around prioritization as well. But maybe just to build on the recommendations that you both have made, I'd like to touch on governance in particular. Ian, could you perhaps share a little bit more on the specific techniques that company can use to apply that risk-based strategy that both Guillaume and Kobe have alluded to? And also, are there any new tools or techniques that you'd recommend to them?
Yeah, sure. When you start to look at cyber risk governance and digital resilience, one of the key things you need to understand are what are your critical assets and business processes that underpin the organization, and indeed third-party suppliers, which would be part of those business processes. And there's various techniques that can be used, such as IT asset management kind of capabilities. More we're looking at IT systems. You can look at business processes in terms of your key business processes, whether it's payments processing, whether it's trading, whether it's customer service, etc. So there's a number of things you can do that have been out there for some time. One of the techniques that we like to think about, and that is increasingly being used, is to quantify the risk in financial terms, and really there's a join here from a cybersecurity perspective. As a cybersecurity and a technologist, there's often a gap between how technical people think about cybersecurity and how business leaders think about cybersecurity, and of course there's a need to meet in the middle and understand what the impact is and what the investment needs are and what the criticality is of it, and the kind of the link that we find works well is to quantify the risk in financial terms. And so by doing financial quant modeling, what you're typically looking at is, under various scenarios, whether it's a data breach, whether it's a system outage, or whether it's some other impact of a key process, what is the financial impact of that, right? What happens if there's a data breach? What's the financial exposure? And not just thinking of the data loss and GDPR fines or so forth, or indeed DORA fines, but also thinking about other things, whether it's litigation costs or incident response costs. So there's kind of tiering of costs that go behind these. This thinking can apply to data breaches. It can be applied to system outages. And just to bring it to life for a non-financial institution scenario, this genuinely happened to a global fast-moving consumer goods business that got impacted by NotPetya a number of years ago, and the impact on their business process. Manufacturing kept working, supply chain kept working, but there was one system at the end of that process which was for labeling, and it was the labeling system that went down. And as a consequence, they couldn't ship any product, and the warehouse stacked up. And this labeling system was, built in the 1960s and had never been rebooted, probably in the 40 years or so since then. So, when you start to look at business processes, it's really important to look at it end to end and break it down into defined steps and look at the financial impact and really understand and be ready from that from a resilience perspective. So, and what we find is by thinking it in financial terms, it then joins into the kind of business and leadership view in terms of the impact and in terms of potential investment needs to improve resilience as well.
Yeah, that makes a lot of sense. And I think in terms of quantifying that financial impact, I mean, you've taken an approach that looks at internal processes and how do companies think about the financial impact to them of these different systems going down. Taking a look at that end-to-end perspective, I wonder what role vendor management plays when it comes to DORA. And perhaps, Kobe, what would you say DORA encourages about third-party risk management? And are there things around the impact of third parties that we can build into companies' risk management thinking?
Yeah, so I think the key word is scale. It's we're living in or entering into an era where customers that we encounter experience 200x on the capacity that they theoretically need in order to meet all requirements. So we're talking about DORA, but GDPR was mentioned. But if you're a critical vendor or in a critical industry, you might have also NIS2, you might have also CII in the other places in the world. If you're in specific sectors such as shipping, defense, banking in the US, others, you might be exposed from various regulations that requires you to assess and to prepare yourself better in terms of your third-party risk. And that means that you need to do more with the same or even lower resources, and it's becoming critical because there is more and more dependency on third parties. We're living in a very digital world, more APIs, more fintech companies that are providing services. There are ecosystems evolving, such as around the open banking and PSD2 that requires more and more connectivity and data processing. All in all, requires a lot more visibility, and that means that you need to embrace different kind of methodologies than just only assessments. In the past, and even today, a lot of companies are basically sending out assessments like questionnaires, getting responses, evaluating them, maybe doing some audits to part of them. It's very non-cost effective, coming up with the risk remediation plan, and they're supposed to be good in their perception for the next year or two. That's no longer sufficient enough, not even close. You need to have digital processes, you need to have procedures and policies, how to onboard, how to assess, how to continuously monitor and continuously monitor the right things. You need to gather intelligence about those critical vendors in order to be ahead of the curve, understanding whether there is a breach and data leakage. You need, under DORA, to do pen testing for the relevant vendors. This is rather a new thing. People are not doing enough pen testing for their vendors. Traditionally, vendors were objecting to enabling to do pen testing on them. That's no longer the case. You have to check the resiliency. And on the bottom line, you need to contextualize everything into a prioritized risk management plan. So you will be able in the end to present to the board, to present to your management, as Ian said, what is the financial risk? What is the risk quantification of this entire set of tens of thousands of issues of thousands of vendors? What does it mean to my company? By the way, if I may, for CISO, that's an excellent budgeting tool because management board understand risk, understand financials, they understand financial impact, and that could help explain to the board what is the meaning in terms of risk mitigation. And we have customers that are using those kind of metrics in order to enable to get budgeted and to mitigate that risk better.
Got you. And I think so far we've spoken about, as you've just said, Kobe, the importance of translating this into financial impact risk metrics that the management can understand and tools that a management can use. But we've also talked about prioritization and the processes involved. And Guillaume, what are your thoughts on the role that management plays in actually making all of this happen? What is the role that they need to play when it comes to meeting the standards that come into that become relevant because of DORA?
Well, they play a very, very important role. And I would say DORA is maybe one of the first instruments in this cybersecurity space where it's made this explicit that they are in the driving seat. And we see this being repeated now in NIS 2 that we also mentioned, also has similar obligations. I even understand the UK equivalent of those rules have similar things. So what is happening in practice is that they will be ultimately accountable for all these elements. And we've already touched upon that. The horizontal part, so making sure everybody is coordinated is fundamental. And you see that reflected to a large extent also in the requirements of DORA. What you see there is that the board is first of all put in charge of adopting the policies, so the way in which the company will address, but it's goes much further than that. They are also explicitly put in charge of setting the roles and responsibilities. So it's for them to allocate in a way who does what within the company and to keep an oversight, of course. They are also the ones setting the strategy and approving the strategy. And that includes, coming back to the risk points, also setting the risk tolerance level. Because I think Kobe was alluding to that, you can have a whole set of risks, but how do you select the ones you are going to address? How do you prioritize, and what do you deal with first, and what maybe do you not deal with because it's a minor risk or it's something you can manage in a different way? So all of that again being placed at the level of the board. And then on a sort of ongoing basis, they will also have to do periodical reviews. So it's not just a one-time exercise, setting it and then forgetting about it. They need to set up reporting channels so that the information comes back to the board and that they can then review. And then last but not least, it's also under DORA, the board who sets the budget. So you could say that in a way they will have to put their money where their mouth is, and they cannot take, you know, specific targets and say this is what we want to achieve in terms of risk management without allocating an appropriate budget for it. So you really have the three areas. You have the risk, you have the tolerance, and you have the financial means to achieve that. And by the way, we're talking a lot about DORA, and as already mentioned by Ian, it is of course a piece of EU regulation, but as I said, it's increasingly becoming best practice or even no longer acceptable to work in silos or to not have this kind of management attention to cyber resilience due to how important it has become to the business. I think the example with the labeling system being out very well illustrates that. It's, you know, the risk can be in different pockets within the business, and it requires real oversight in order to manage those risks effectively.
Yeah, and I think the example of labeling also gives you a sense that it's really the slowest or the most risk-prone system that will determine the level of risk of the entire system. And Guillaume, you also spoke about having and dedicating the resources. The management needs to make a decision to dedicate those resources to cyber resilience in these processes. Of course, when a company is preparing for IPO, that's a time when a company is potentially resource and certainly mind space strapped. Ian, I know you've advised a lot of companies at that time. How would you approach a company thinking about its IPO plans, and how would cyber resilience and the resilience of their operations figure into that?
Yeah, really good question. What's interesting about an IPO is that clearly, having been working with entrepreneurs and having been in the journey of starting tech companies, there's clearly a lot of effort to get a company to the point where you're ready to list it on a public stock exchange. And clearly you're going from a risk regime that is very focused in terms of what was appropriate for the business as a privately held business, to what's an appropriate governance and risk for a publicly listed business. And that IPO process is clearly the transition between that. What's key from a cyber perspective is getting the business resilience ready and to a level where it's appropriate for public listing. And hackers are increasingly smart about transactions in M&A. They're looking for events like this. Because if you're, I don't know, let's pick a number. Let's say you're going to list a business for, £1 billion, coming along and asking for, tens of thousands or even, 100,000 of bitcoins or pounds in bitcoins. Frankly, a lot of businesses just say, let's just pay that and move on and so forth. So, to avoid that type of scenario and stop delaying the process, getting your resilience right is key. And making sure that that the kinds of thing that we're talking about from a DORA perspective is done in advance. So understanding your risk regime, doing security testing, also like looking external to the business, looking on kind of deep and dark web, what do people know about the business, etc. Looking at security testing, and what we would recommend is actually a period of additional monitoring during this IPO process. It is not a process you want to be disrupted, and so really, these are some of the sort of more security things you need to be thinking about. There is also the whole governance and risk reporting is key, because investors are trusting what you say in the prospectus and in your listing, what you're saying about your risk governance, what you're saying about your response to cybersecurity, etc. And they'll put some reliance on that as they go through the process. And what we've seen, and I won't mention names because it wouldn't be appropriate, is that there has been other companies in the US that have listed where certainly there's allegations made that what management had put in some of those statements were not accurate. And this not only got the company into some trouble, but actually specific kind of leadership in the company have been held. It's an active situation, so I won't comment on it. But it's been, there's allegations about individual, kind of liability around it as well. So this whole IPO process is quite key. There's a lot of money at stake. There's a lot of pressure. There's been clearly a long journey for the business to get there, and so having your cyber security ready for that process, both pre and post IPO, is absolutely critical.
If I may jump in and make a remark, we're working a bit with the SEC about breach disclosure requirements that were published about 6 months ago. And Ian, you were very polite. I'll be a bit more blunt. We are living in this kind of era where you see a significant growth in criminal and accusations made for companies that were not disclosing properly. It indeed transforms into individual processes, and there should be, in the end of the day, it's all about proper policies, procedure, methodology. I think that if those companies had processes in place beforehand, they will be much easier able to present due process regarding their investigation, regarding their disclosure, and they wouldn't get into this situation where they disclosing partially, and that gets everyone into trouble. So I think it's a matter of getting ready beforehand and understanding that if you're a public company, it means much more accountability in terms of the regulators.
Definitely. And I think you've all touched on the point of the importance of continuous monitoring. That's definitely been a theme so far. And let's assume that all of those processes are indeed in place. The continuous monitoring is working well. Despite all of that, a company would still reasonably expect to encounter high-risk scenarios. So how would you all recommend a company actually go about preparing for those specific scenarios? And how do you think they should act after it happens and deal with the fallout from such a scenario?
She'll start,
please.
So maybe I'll start. So I think that before the event, beyond the traditional assessment, I think there is a lot of room to understand what's your vendors or your third parties, crisis readiness. It's another kind of assessment. What happens if the risk it transforms into a breach? Are you ready as my third party? What does it mean? What do you need from me? What do you need to provide me? What's your SLA, and so on and so forth? That should be accumulated across the entire supply chain. Once a breach happened, there should be a proper process of disclosure. Disclosure that means that it will be in a proper SLA, so I would know in advance or as fast as possible what is the breach. And then I think this is the most critical part, to understand fast, what does this breach mean for my business processes? What does it mean in terms of impact? It might be that it's very minor, but it might mean that it's super significant. And what would be the action items per vendor that the risk was materialized? Once everything is in place, there is basically clarity and order, so you can understand that there is a breach, you understand what's the impact, you understand what you need to do, and just afterwards act upon it. If you have those in place, I think you would be much less in a crisis, and you will be able to show after the fact that you acted reasonably in order to mitigate that risk.
And maybe to complete that picture, and I think Kobe really points to the importance of the preparation in advance of an event. But during the event, what we see as one of the key elements is the governance. Because what happens in practice is that it's a highly stressful situation. Companies may sometimes not have full availability of, for example, their communication systems or their emails or their online documents, etc. And so often the information gathering is already a challenge. The centralization and making sure that everybody knows what the other one is doing is certainly not evident in that kind of situation, as is the categorization. There's a lot of information coming at the same time, but as Kobe was alluding to, knowing what really matters, where the elements may lead to a breach, as opposed to, you know, an incident, a cyber incident that may occur on a regular basis, but that doesn't amount to a breach. There really is a need for, you could say, triage at that point between all these different elements. And that is one of the things we often do in those settings. So we also, of course, have the benefit of being able to work around privilege as well, the information we work with. And all of that in a way of interacting with the company. Just to give a very simple example, we dealt with a situation where a company had to notify its insurer of a cyber incident, but the insurance policy was in a system that was locked by ransomware. And that's something, of course, on the moment itself, it can lead to difficulties if you didn't do this preparation, but also governance is key. So having the ability to reach out to the people who have made that cyber insurance policy or that may still have a copy, etc., it's really fundamental. So those are maybe the key takeaways, I would say, in the first hours of such an incident, or in the first days of such an incident.
Yeah, I mean, I concur. I mean, I think, you know, one of the key aspects of, you know, the gentlemen have talked about readiness for an incident and so forth. You know, having, there's a few key things you can do in terms of readiness and response to an incident. One is being prepared, doing tabletop exercises to make sure that you're fully prepared for an incident, making sure that third-party suppliers are prepared, making sure the contractual agreements are in place with third-party suppliers so they're all equally back-to-back with you in terms of your notification times and so forth. And then, you know, you obviously need the operational monitoring in place in order to detect incidents. And then should an incident occur, then obviously having the contractual relationships in place with the, you know, an adequate incident response firm is key, right? And that's going to be around the, you know, digital forensics and incident response. It's going to be around the legal response, as well as, you know, the interaction with the regulator and keeping everyone abreast. You know, I've been in the midst of a number of cybersecurity incidents, you know, where we're assisting companies, clients through that process, and it can be an incredibly stressful time. And, you know, what's key is that is not to underestimate the amount of management bandwidth it's going to take, the amount of stress that will put on the system, etc. So this is not the time to start figuring out, you know, who's responsible, who's going to make decisions, and, you know, what's the criticality of systems and so forth. You know, you absolutely have to, as best as you can, have it down as a playbook, and so you're ready to go when it happens. And of course, look, at the end of the day, you know, most regulators, they're there to actually support, right? This feels a little bit like, you know, how shall I describe it? It feels like, you know, some kind of, you know, governance that have been put in place and some rules and some things. But actually what the regulator is trying to do is help, right? We work with the Bank of England, we work with the FCA, and what they're really there for is to try and help improve the resilience of the system, and they're to support and guide. Of course, they're not going to do it for you because they can't take that role, but they just want to be able to make sure that the broadest industry is ready, is available, and they'll coach and guide as much as they can as well. So this isn't, businesses should not feel like this is sort of being done to them. It's been done for a very good purpose, and the regulators are keen to make sure that all business are thriving, successful. So yeah, but those are some of the things we should think of from an incident response perspective.
Great. We've got 5 minutes left in this part of the webinar before we go into more interactive Q&A. And as a final takeaway for our audience, could you all maybe say a little bit about best practices and processes that you think would be relevant when it comes to DORA? And Guillaume, if I could start with you, and then Kobe and Ian.
I think we've already touched upon many of those best practices, but the one I would insist on, and I've already mentioned that, is coordination and probably also early engagement with your board if that hasn't occurred yet. And we're about a year from the entry into force of DORA. This is really one of the key priorities, to make sure you get all your ducks in a row and that everybody is working in the same direction.
I would say that, again, I'll repeat that it's about scale. You need to start with doing vendor discovery, to do like a project mapping all your vendors, classifying them to vendor groups, to understand what's your inherent risk rating for each engagement, to align with that the proper assessment and resiliency check, and to be able to move the needle from periodic assessment to continuous monitoring wherever relevant, and that will help to mitigate that scale much easier.
Yeah, I think the key thing is that I think every business really has to start off by doing some kind of gap assessment versus where they're at versus the kind of 5 key components of the DORA regulation. Think about your current governance processes, your incident response processes, etc. How closely are you aligned to this? There is an element of proportionality, which I think is key here, right? Not everybody's expected to have the same digital resilience as a global financial institution or other global organizations. So it has to be proportionate to the size and the criticality of your business. So getting that right. Then I think it's about developing the plan and the mitigation steps to appropriate it, given the fact that this comes into live in January next year. I think that's going to be key. And then, frankly, everything in here is kind of common sense, right? From a cybersecurity, I don't want to undermine DORA. There's a number of very good regulations out there, including DORA. There is FCA, operational resilience requirements as well. But think of this as a continuous loop. Think of this as a, continual improvement. Like cybersecurity is continually evolving. There's obviously the advent of AI and the impact that will have both in terms of different types of attacks, different types of business email compromise, different, so forth. And there's different tools and techniques. So, this is not a, achieve DORA regulation and then, put it in the past and it's a checkbox exercise. This is a continuous evolution. So continually think about assess, improve, remediate, be ready for response, etc. So, do those 3 things, and I think you will be in good shape.
Thank you all. And just going to some of the questions that audiences have asked us before this webinar actually happened. I'm curious about, well, so far we've been speaking about companies from the perspective of how they will implement these processes internally or for their own products. Now, of course, companies supply services to others. So as a critical ICT third party, what can a company do to support the businesses that they actually also supply? And Kobe, I'm sure you can weigh in on that.
Yeah, so it's important to state here that sadly for the vendors, those regulations growing all over the place and the awareness of customers create a situation in which the vendors are experiencing dramatic GRC growth. The need to comply with more and more customer requirements. But in the end of the day, the vendor security posture is critical in order to secure the supply chain of the customer, in order to be able to maintain continuous service and eventually be able to do business. So it's important to understand that the vendors that will not comply or not like upscale their security posture would not be able to do business properly in the future in critical infrastructure sectors. That means very simple steps eventually. As Ian said, do a gap analysis for your own posture. You will discover that you have major gaps, develop some kind of a methodology. And I would say as an advice, just align with whatever is the most common kind of framework that is required by customers. So if most of your customers are DORA subjected companies, align with critical infrastructure frameworks, do penetration testing on yourself, develop disclosure methodology for your customer. If you are serving critical infrastructure or defense, embrace CMMC, for example, and other frameworks. But it's a rather common practice. Every company who is serving regulated companies would need to align with some kind of a best practice framework.
Got you. And I'm thinking about the frameworks and the different frameworks for each of the regulations. Guillaume, what's your take on the overlap, or even in fact the specific differences between DORA and other regulations that are already in play today?
Yeah, that's of course a fundamental point. DORA does not live in isolation. There is existing law, and there's also future law, by the way, coming in the EU, which can overlap and certainly does overlap to some extent with the DORA requirements. And in a way, what you will have to do increasingly is not conduct, for example, a risk assessment purely from a DORA perspective, but you will have to make it very transversal across those legislations and identify the risk in a coherent manner. For example, we already have an obligation to carry out a risk assessment under the GDPR, where you are looking at the data protection impact assessment, for example. Increasingly, a business will want to look at it, combining that risk with for example, the risk of resilience, the DORA. And it may also be relevant to look at how that data may be used in an AI system later on. And as you probably know as well, the EU AI Act, which is close to adoption now as well, also talks about risk assessment. So those methodologies increasingly have to be taken as a whole. And it's the same thing if you look at contracts, for example. We already have, of course, data protection provisions in many agreements. DORA will require an upscaling and repapering to some extent of the contracts with your vendors to implement some of the elements Kobe was reflecting also in the agreement. Well, it's the same thing if you think about AI later on. If that vendor is also using AI, you may have to think about not only the data protection piece of your contract, not only the DORA piece, but more generally, how am I going to interact with this vendor on a contractual level in order to cover those different elements taken as a whole. And that's really the challenge, not what we are working on a lot these days.
I'm also curious about how that challenge applies from a financial risk and impact perspective. And Ian, maybe could you share a little bit about how insurance would figure into this? And are there any specific things you'd recommend to companies on how insurance can really play that role in building a more resilient cyber resilience strategy?
Yeah, sure. Look, I think insurance just for transparency, my background is a technologist, as a software engineer. So, but I do work for a very large insurance company, so I've gotten to learn quite a bit about it over the years. Insurance fundamentally is, about transferring risk, transferring capital at risk specifically that's on your balance sheet into a third party. That all forms of insurance. That's what it's about. It's a financial contract in order to do that. Interestingly, the insurance, as it relates to cybersecurity, underwriters have got very, detailed on this now. So, things like cyber insurance is not a guarantee. It is definitely something that underwriters will look at to see if they're happy to take on that risk. But fundamentally, what the role in something like this is fundamentally taking capital risk that's on your balance sheet, and if you've gone through the process to financially quantify that risk, you'll know what the quantum of risk is on your balance sheet, so that in a bad day in the office, what could happen in terms of the financial impact. And so, to a certain extent, if you know what that is, you kind of got two choices. You can either say, we're going to have, whatever the number is, 10 million, 20 million, 50 million, whatever the number is, sat in our balance sheet to cover that bad day in the office, because you will need it, right, if this happens. Or you can choose to transfer all of it, some of it, a proportion of it that you feel comfortable with, into a third party, an insurance underwriter in the market. And what that does is it frees up capital on your balance sheet. And that capital in your balance sheet can then therefore be used for, remediation and improvement activity as it relates to cybersecurity. It could also be used for, other investments, other operational improvements, etc. So that you have that investment dollar. And it's not just about cyber risk. Clearly that's covering things like, ransomware and system outages and data leaks and so forth. It's not just about cybersecurity. We talked about the SEC situation where individual directors and officers can be potentially liable as well. So it can actually be thinking about personal risk, so company risk, personal risk to the individuals, and taking those types of risks off the table. So for me, insurance is all about capital optimization and making sure that is efficient. It should be a highly analytical exercise. If there's one area there's lots of data available, it's cybersecurity. So you should be able to quantify that and figure out what the right capital strategy is.
If I may add a bit of my perspective to that, following on Ian, so like from a strategic risk management point of view, when you're looking on your supply chain resiliency, you need to distinguish between three types. One, what are your crown jewels and your assets that you should defend by yourself? That even though it's insured, even though someone else take care of it, you need to defend it by yourself, be hands-on on it, otherwise the price is like infinite. The second portion is what can you delegate to others? There is a trend around MSSPs, managed services, around supply chain resiliency that we see growing. And the third one is what is the kind of risk that remains on the table that could be insured as well. So this kind of distinguishment is basically enabling you to plan your overall approach toward your aggregated supply chain risk.
That does make a lot of sense. I think we're just about coming up to the hour. Today, we've discussed a broad range of things around continuous monitoring, the importance of board coordination and governance, and of course, quantifying the financial impact of all of these risks. So thank you so much, Guillaume, Kobe, and Ian for your time and providing these excellent insights. To everyone who's watching, you can visit their marketplace profile pages at lsegissureservices.com/marketplace. And thank you all for watching.